Hey all, this tutorial corresponds with our note on revenues and expenses. And I'm going to show you how to do some T accounts that incorporate revenues and expenses, but also still have our assets, liabilities, and owner's equity accounts active. So you're going to see some of these transactions will only be our asset, liability, owner's equity, and the other ones will incorporate our income statement accounts. Sorry, I had a little bit of a brain freeze there. It's the end of the day for me when I'm recording this. Okay, let's get into it. So, owner invested $500,000 in the business. 500 goes up in cash, and then also in our capital. So we've done that already. You should know how to do this by this point. Okay, we bought a building for $240,000 cash. Again, this is not regular sales of goods that we are selling in our business, or we're not paying any bills or anything. We're just buying a building to set our business up. So it cost us $240,000. What a bargain. We put $100,000 in a down payment. Let's add one more zero to that. And then $140,000 in our mortgage. And let's add some color coding here. So we can see that we have $200, $240,000 in credits, $240,000 in debits, and that is this transaction. So let's do this in a nice little green one. And then owner invested money in the business. Let's start it off with this guy here. We'll do like a orangey kind of transaction for that. Okay, you don't color code your T accounts, by the way. This is strictly for learning purposes. Okay, on October 3rd, we sold $15,000 worth of services to a customer. This is the first time we're going to see an income statement transaction. Okay, so if we sold our services, then we made a sale. And so that's going to be $15,000. You may be thinking to yourself, why does it go up with a credit, not a debit? Assets go up with a debit, and assets are good, sales are good, so why not? There's a very simple explanation, and that is when the company makes a sale, the owner gets that money. So the more money that an owner makes, the more equity that they have in a business. So sales are actually a minus plus account. They increase with a credit and decrease with a debit. And because we made a sale here, we're going to get $15,000 in cash. So that is that transaction. You're going to see this a million times during the course. But now we are upping the complexity here by doing a transaction where we've got income statement and balance sheet accounts talking to each other. Here's a second one. We paid a utility bill worth $1,000. So bills aren't good for the owner because it costs them money. So it was a $1,000 bill, and we will have paid $1,000 on that. So when this is a expense asset transaction, so we got a bill and we paid it right away. So we paid our utilities, and when we pay something, we have less cash, but we also have this expense now that we must have in order to run our business. We need to have all of our utilities working, otherwise we can't have a business. All right, this is another expense. We have to pay our employees, right? So we're going to pay them. Salaries increase with a debit because they're not good for our owner's equity, although they are necessary for us to earn revenue. And so we paid $14,000 in cash. So that is that transaction. And running out of colors here in my mind here, my rainbow of T accounts that we're doing today. And finally, we have a transaction where a customer purchased $5,000 in services on account. Okay, so we made a $5,000 sale. However, the keyword here is account. They didn't pay us. So we have now $5,000 account receivable. In earlier units, you're probably wondering why a customer only ever paid us. It's because we actually hadn't incorporated income statement accounts and sales into our business yet. And that is done by design. But now we are ready to increase the overall complexity of what we do here. So the a customer bought goods on account. So there's $5,000 in sales and $5,000 in sales. You'll note nothing in supplies, accounts payable, advertising expense at this point. That's okay because it's a fairly basic introduction. So I'd like you to look through this, and it will be color-coded for your example, and follow along with the colors to see how the transactions worked. Now, what we would do from here is we would create our income statement, and it is for RJ Vintage Clothing. So I will quickly do an income statement here, RJ Vintage Clothing. And I wasn't really given a date here or time, so I'm going to say for the week ended October 6th. Whoops, that's what happens when your fingers are in the wrong spot on the keyboard. For the week ended October 6th, 20 we are going to put our revenues first. And in this case, our revenues are, so note we're not going to do any of these accounts here because they belong on the balance sheet. So when we do a balance sheet, that will go to the balance sheet. I didn't do my totals here because this is not how to do T accounts, this is how to do T account transactions that include income statement stuff. So $20,000 is our sales. So I'm just going to put in sales, $20,000. Had no other revenue at this point. This is going to be the easiest income statement we've ever done, by the way, everyone, but for the purpose of this example, let's do this. Okay. So salaries and utilities is all we have. Salaries, expense, utilities, expense. All right, and there's a few things you can do here. You'll see I only have one. When you only have one, you can actually put it in the total category over here, or I don't care. You can do total revenue if it helps you organize your thoughts. I'm good with whatever. I'm good with that. Okay, 14 and 1,000. I don't know why there's a $sign there. So I'm just going to, here's a quick little lesson. If your numbers are screwed up, I just do this 1, 2, 3. I choose number, and then I just do this, and then I format it later. Okay, total expenses. And I see my revenue is 20, my expenses are 15, so I know I'm going to have a net income. And if you don't know how to format an income statement, just look at the previous tutorial and you'll see that. Okay, $signs go on the first in each column and then the final number. So I'm going to throw a $sign on that. Single underline here. Oh, let me take these boxes away. I tell you, the fact that, whoops. I don't know what's going on here. There we go. The fact that Google Sheets doesn't allow a simple underline, I'll just do this. I can do an underline here and underline here and underline, not there. You know, these videos would be about 6 minutes shorter if I didn't make all of these mistakes, everyone. All right. And then we double underline. There you go. So there is your income statement for RJ Vintage Clothing for the week ended October 6th, 20 dash dash. What we're going to learn next is what happens with that $5,000. Who gets it? Stay tuned, my friends. We are about to find that out in a future tutorial. All right, take care. Good luck with all of your work on the rest of this unit.